Due to the conflict between Russia and Ukraine and the spread of COVID-19, the inflation rate has been much higher than the European Central Bank's target of 2% and expected to rise. In this case, the European Central Bank should accelerate the withdrawal of monetary easing policy and start a small interest rate increase, mainly to stabilize inflation expectations, show its commitment to fight inflation and prevent stagflation crisis, also helps the economic growth of the Eurozone. An insufficient monetary policy response would have implied a longer period of low inflation. Excessively low inflation would lead to higher real interest rate, thereby weakening the recovery of investment and consumption.
With the help of rising interest rate, the strong operation of the euro will increase investors' confidence, attract funds flowing into Eurozone, improve the financing cost of Eurozone countries, and reduce export competitiveness. Moderate interest rate hikes have promoted the fight against the inflation, helped the ease of pressure on emerging economies and world commodity investors in the capital market, and under the current global inflationary pressure, the European Central Bank's interest rate hikes is a way to protect itself. However, it plays a limited role in relieving the overall global pressure, as the decline in supply caused by geopolitical and military conflicts is beyond the control of Eurozone banks. It is conducive to prevent lipstick effect and the proportion imbalance caused by excessive consumption, which is not conducive to the continuity and expansion of the production.
The debt crisis needs to be handled with caution. Since the outbreak of the COVID-19, the European Central Bank has purchased bonds on a large scale, learned the lessons of the European debt crisis. However, an exit from loose monetary policy would lead to an increase in the risk of debt crisis and economic recession. From the perspective of the financial system, rising interest rates will increase the financing costs of banks in Greece, Spain, and other troubled nations, and non-performing loans may increase. If interest rates rise immediately, many enterprises may face greater pressure on loan repayment, leading to liquidity crisis and solvency risk, resulting in higher possibility of unemployment and economic collapse. Therefore, the premature interest rate rise in the Eurozone may have negative impacts on employment and weaken the economic recovery.
There is a reason about why did inflation during the financial crisis not be as serious as it is now. During the financial crisis, the European Central Bank implemented the quantitative easing policy focusing on increasing the basic currency, but the willingness of the new money to serve the real economy was low. During the crisis, the high risks resulting in a high financing cost. The willingness to invest is low. The willingness to deposit increase. The risk on non-performing assets in banks is higher and the reserve ratio increases. More money is still in real estate and the stock market. The inflation caused by Russian-Ukraine war and COVID-19 belongs to imported inflation. However, during the financial crisis, the expected enterprise production scale declines and the reduction of crude oil demand leads to the reduction in price, which did not actually lead to inflation. If interest rates are not raised, inflation in the Eurozone will be rampant, eroding consumers' purchasing power and making them lose confidence in the government and central banks. That's all. Thank you.